Hello, everybody, and thank you so much for joining us for this special edition of Bloomberg Daybreak. U.S. markets are closed for the President's Day holiday. I'm Nathan Hager. Coming up this hour, we'll look ahead to a couple of major lawsuits on the docket. Elon Musk's battle against OpenAI and the Justice Department's case against Live Nation and Ticketmaster. We'll break them down with two of our litigation analysts from Bloomberg Intelligence, Matthew Schettenhelm on Big Tech and Jennifer Rhee on Big Ticket. Plus, we have a big earnings report coming up from AI behemoth Nvidia. BI analyst Mandeep Singh and Kunjan Soubhani will be along to preview those results. Before that, though, we hear from the world's biggest big box retailer this week. Walmart reports earnings on Thursday. Here to get us set for that report are Bloomberg Intelligence senior analyst Jennifer Bartashas, who covers retail staples, and Poonam Goyal, who's got things covered on the e-commerce side. Thanks to both of you for being with us. And, coming off the flat retail sales report for December that we saw recently, Jennifer, I'll start with you. How does that affect what we could see from Walmart when it comes to the earnings this week?
What's interesting is that for Walmart, it doesn't matter so much what the retail sales do, just because the trends that are in place have really been conducive to their growth in their business. People are seeking value. People are seeking, ways to streamline their time and find convenience. And Walmart just seems to be gaining share based on their ability to offer that to their customers. So regardless of the macro environment, Walmart really seems to be thriving at the moment.
And Poonam, to bring you into the conversation, we're seeing a lot of consumers seeking out Walmart's business on the e-commerce side as well. How could that play out into these earnings?
And we think Walmart will continue to do well on the e-commerce side. If Amazon is any reflection on how the consumer is shopping online, they had great numbers on the retail side, high single-digit sales growth in their online business. We expect Walmart to be no different. They've put a lot of investment behind their e-commerce unit, and they have been very quickly gaining share. It's over $100 billion in GMV today. That's pretty impressive given how little time they've gotten there. So we think the e-commerce handle for them will play out well, just like it did for Amazon.
It's interesting, Jen. Walmart is seeing competition from Amazon on multiple fronts, not just on the e-commerce side, but Amazon is kind of altering its footprint in the grocery business as well. How do you see Walmart weathering that?
Well, I think what's interesting is that, when Amazon announced that they were closing their Amazon Fresh stores and their Amazon Go stores, which was more of a convenience store format, people kind of sat up and took notice. But it's important to remember there were way under 100 of those stores altogether. So it's never been the majority of Amazon's grocery footprint. Instead, they have a lot of sales that are what you would consider grocery category sales that happen through Amazon.com and through their Amazon Fresh. And so those are your fresh items, those are your paper towels, things like that. Walmart is the biggest grocer in the United States. They own almost 30% of market share. So they're very well entrenched, and because they've been investing in their capabilities, I think there's room for Amazon to grow, but we're not expecting any kind of major change in who's the leader in grocery over the next couple of years.
You got to think, Poonam, that Walmart's got room to grow overall on e-commerce as well. Although Amazon being the behemoth it is, what's the challenge for Walmart to compete online?
I don't think it's really a challenge anymore because they're making the right investments. They're investing in logistics. They're investing in product and expanding their marketplace. A lot of times people tend to think that if Walmart wins, Amazon loses. That's not the case. I think both of them can grow together. There's a lot of share shifts that are taking place in retail where shopping is just gradually moving online. We have estimated that 25% of total retail sales in the U.S. are online today, and they're going to be growing to 33% in the next few years. So there's plenty of opportunity for retailers to capture that growing opportunity. And among them, Walmart and Amazon are still probably best positioned to do so.
And when it comes to the overall business, Jen, is it all about grocery for Walmart? Is that where the basis for Walmart's business is right now? Or is it seeing the potential for growth across its categories of items that it sells?
No, there's definitely growth across all of the categories. Grocery categories do comprise, about half of Walmart's total revenue. So it is important. But the company does a great job of having that broad assortment be tailored to be appealing to customers, and that's in the U.S. and that's worldwide. And so, what we see is that grocery is great because it's a frequency category. You buy groceries frequently, it takes you to stores. But once you're in the store or once you're online placing that order, between either the in-store experience, the merchandise selection, or the technology that's used from an interface perspective, it's really helping guide people to buy more than just their groceries at Walmart. And so, they've had much stronger general merchandise sales than some of their peers over the last few quarters.
And Poonam, how do you see Walmart continuing to grow its business on the tech side in terms of developing its interfaces, integrating artificial intelligence into what it does?
I think just like everyone else today, the integration of artificial intelligence, agentic shopping is key. Walmart's integrated itself into ChatGPT, so it's clearly opening up avenues to broaden its customer base and to get a piece of that agentic AI shopping-driven conversion. We think they're making advancements to broaden their customer base beyond, when you think about the Walmart customers, it is broad and it is a customer predominantly that's seeking value, but they're trying to expand that. And they have, to some extent, and Jen could talk about this, have really expanded that through the Walmart Plus membership. But in using AI and agentic shopping and just technology, robotics, automation, we think they are making progress, and they will continue to invest in that front to move forward in retail. Because if they don't, quite honestly, they won't be able to continue to gain share.
I'm speaking with Poonam Goyal and Jen Bartashas of Bloomberg Intelligence. Jen, pick up on that point that Poonam raised there in terms of the Walmart Plus business. There has been this push into more subscriber-fed business. How is that paying off for Walmart?
Yeah, it's a great program for Walmart. When you think about what Walmart has been talking about and over the past several quarters, they've been bringing in more higher income households into their ecosystem. Now, part of that is people seeking value, but the Walmart Plus program, when they get people engaged with that makes people sticky. And so historically, when the economy's been weak, Walmart gains people, they gain shoppers, but then as the economy gets better, some of those customers bleed away. What Walmart Plus does is it helps keep all of those customers sticky and in the Walmart universe, and through the offering of convenience, of being able to have things delivered to your house or even into your house and into your refrigerator directly, or being able to pick things up at the curbside, and all the other perks and benefits that they offer via that membership program. It really helps keep those customers engaged. And it provides a recurring revenue source in terms of membership fee. So there's lots of levels to the win of having a robust program like Walmart Plus.
And in terms of the value-seeking customer getting into that engagement as well, Poonam, do you see that trend continuing, having some of these more higher middle-income consumers getting driven more into Walmart to seek that value?
I don't think that changes much for the lower-end customer. I mean, at the end of the day, Walmart stands for value. So everyone wants to find things cheaper. I don't think a higher-income consumer would go out and say, I'm willing to pay more, unless there's a service element to it or there's an aesthetic involved or a better brand involved. But I think having a broad array of customers, which Walmart is now targeting to expand that upper end of the funnel, it doesn't hurt them. And e-commerce is an easy way to do that, because when you're on an online platform, the experience is similar to all. Versus, people would argue in the past when you walk into a Walmart store, the experience is very different than when you were to walk into a Whole Foods store, right? But if you're shopping online for paper towels, it's wherever you're used to going, and that's what Jen talked about, the stickiness of it, right? When you're a Prime member or you're a Walmart Plus member, because you're paying for this membership, you want to utilize it. And once you begin to utilize it and see the value in it, that's just a natural place that you're going to go to next.
Jen, this is an interesting time in the big retail business, with a lot of these sort of businesses that we think of as catering to the lower end consumer, like Dollar Tree, Dollar General, moving into some of these bigger bigger markets and Target continuing to try to find a direction. How do you see Walmart sort of navigating some of that perhaps increased competition from the lower end retailers?
Yeah, it's a very good question. When you look at the customer, or the organizations that target the lower end consumers, like your dollar stores, in terms of store base, those companies tend to be located in greater proximity to some of those customers. So, it's about trip frequency. So dollar stores are really favored when people are doing kind of quick fill-in trips in between larger shops. Where Walmart comes into play is for that larger shop when people are planning, multiple meals in advance. They're planning, for a larger event or something like that. And so, as we've seen, some consolidation happening in the dollar store industry. We saw 99-cent stores go out of business. We saw Party City collapse. That offers opportunity for everybody, and Walmart is included in that mix.
And Jen, just to close this out, I think this is going to be the first earnings report under Walmart's new CEO, John Furner, right? What's the pressure on him to keep up the momentum that we've seen under Doug McMillon over the years?
I think that certainly there's going to be expectations that he continues with the things that have really benefited Walmart in recent years, which is that willingness to experiment and fail. So experiment, adapt what works, roll it out quickly. If something doesn't work, walk away. I think that he's been with Walmart for a while, so he certainly has the perspective of what the company has been doing. But I think all eyes will be on whether he finds new opportunities to kind of supplement the ecosystem that Walmart has been building. That said, we're not expecting any major pivots in strategy in the short term because the system is working quite well for Walmart at the moment, and they continue to gain share and they continue to pull in new customers.
Really appreciate this as we look ahead to these earnings from Walmart on Thursday. That's Jen Bartashas and Poonam Goyal, retail analysts for Bloomberg Intelligence. And up next, we're going to stick with the earnings theme and look at what to expect from chip giant Nvidia. It's 20 minutes past the hour. I'm Nathan Hager, and this is Bloomberg. Welcome back to this special edition of Bloomberg Daybreak. U.S. markets are closed for the president's holiday. I'm Nathan Hager, and we continue our focus on earnings. Nvidia reports its latest quarterly numbers next week. For more on what we can expect from the chip behemoth, let's bring in Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence, and BI Senior Semiconductors Analyst, Kunjan Soubhani. Thanks so much to both of you for being with us. And Mandeep, I'll start with you because it seems like the bar keeps getting set higher and higher for Nvidia, quarter in and quarter out. Do you agree with that? And how high is the bar this time?
Well, so in the last couple of years, what we have seen is NVIDIA's top-line growth actually tracks the hyperscale CapEx changes. And what we have seen year to date is all these hyperscalers raising their CapEx expectations for 2026. And we're talking about another year of a 60% increase in total CapEx. And so if that's tracking, NVIDIA's top line growth, and it's a good proxy for that, then we can expect something similar. And that's where the estimates keep getting revised upward. And now, consensus is forecasting almost a 60% increase in NVIDIA's top line for 2026.
My eyebrows are already hurting just thinking about that. Kunjan, to that point, $650 billion over the next year is the number we keep hearing from the four hyperscalers in terms of their AI plans. How do you think that plays out for NVIDIA's results?
Well, that should be a definite tailwind. Remember, sometime in calendar 3Q last year, Jensen gave out a $500 billion. This is NVIDIA's revenue, not the hyperscale capex, but $500 billion of a pipeline of a backlog for both its Blackwell and upcoming Rubin, which will be in second half 26 through 2026. Since then, as Mandeep mentioned, the estimates for these hyperscalers have gone up. In some cases, like Google and Amazon has gone up close to 40-50%. So those a significant portion of that increase should definitely go Nvidia's way. So that should now raise the estimates even more since off of that 3Q 500 billion pipeline number.
Mandeep, do you see Nvidia keeping up with the demand that kind of spending entails?
Yeah, in fact, I was at CES this year and then at Davos as well. And Jensen said demand is really strong, at least 10 times, during those big events. So clearly he anticipated this, and NVIDIA has been preparing for this kind of step up in demand. The one caveat here is what we are hearing from companies about memory prices. And every company that has reported so far on the hardware side has called out, memory pricing being a challenge. I think NVIDIA, given their scale, has probably managed it far better than some of the smaller companies. But there's no doubt that memory is having an impact on the supply chain this quarter and most likely for the next couple of quarters at least.
Now, give us your view on that, Kunjan, because to Mandeep's point, that is something that we've been hearing a lot from many companies, even outside the hyperscalers, that these memory prices are a potential crimp to their margins.
Yeah, I mean, that is true. And as an industry, they just have to deal with it. But given, in the terms of stack of priority, look, NVIDIA is, of course, going to get the first priority. We have seen, including NVIDIA, but we have seen from the memory players that they are reprioritizing key markets, which is the data center, which is the latest and greatest servers, because that's where they get the most profit and the most dollar. NVIDIA also has prioritized and has actually announced that they're going to not ship enough gaming GPUs because they want to prioritize the memory that goes to the server GPU. So we think NVIDIA should be okay. The smaller, much more not sophisticated players and players outside of the data center will see some impact of taking allocation away from them or not getting the key allocation. But NVIDIA and hyperscalers should mostly be okay.
Now, Mandeep, we know that NVIDIA is an industry leader in the GPUs, but we hear all this talk as well about TPUs. How could that be playing out in the earnings when they report?
Yeah, I think what we saw from Google is one, they expect, 50% of their deployments to go towards their cloud business. And the cloud business seems to be accelerating. We saw a quarter with 48% cloud growth, which is far better than the other hyperscalers and with, better margins. So I think where the TPU story is really solid for someone like Google is the fact that, one, it's vertical stack integration that gives them a much better, token per watt sort of a metric compared to other hyperscalers. And also, I think in terms of CapEx efficiency, Google probably is the best position when it comes to the hyperscaler. So it'll be interesting to see, what Microsoft and Meta end up doing, given Amazon has also talked about ramping up their Trainium chips, their own ASICs. So both Amazon and Google are a tailwind for someone like Broadcom, which Kunjan can talk more about. But clearly, I think Microsoft and Meta are probably more reliant on NVIDIA at this point than the other hyperscalers.
We're speaking with Mandeep Singh, Global Head of Tech Research at Bloomberg Intelligence, and BI Senior Semiconductors Analyst Kunjan Soubhani. Kunjan, let's pick up off of Mandeep's point about how NVIDIA is weathering the competition from some of these other chip players, not just the TPUs, but the likes of Broadcom, AMD, Micron.
Yeah, I mean, look, there is no doubt, and we have a forecast in our latest AI chip deep dive that we have published. But there is no doubt that ASICs are, which is the likes of a TPU and a Trainium, are going to grow fast and to some degree definitely take share away from NVIDIA. Its GPU competitor, which is from AMD, is also getting ready to ship its first server level solution in second half 26. So look, competition is coming from all angles. Having said that, though, NVIDIA is also not sitting on its heels. They have been trying to explore different areas and markets. One example is they have announced they are going to start selling their best-in-class ARM-based CPU as a standalone chip. So entering into a brand new TAM that they didn't have access to in the past. And we think beyond just server GPUs, they will be making forays into a lot more other areas of AI, whether it's automotive, whether it's physical AI. So right now, the demand is so high that despite such high competition that I talked about, Nvidia can still continue growing really handsomely, at least for the next 2 to 3 years.
Mandeep, how do you see Nvidia's growth trajectory at this point, not just on the chips, but in growing into other markets? Does Nvidia even need to grow into other markets when the hyperscalers are talking about the kind of spending that they are?
Well, you have to think, 1 or 2 years ahead, because the kind of levels we are seeing with CapEx and, as I said, we'll see another year of 60% growth. We already had 2 years of 60 to 70% CapEx growth. These kind of growth levels are not sustainable. I mean, there is no doubt that growth in CapEx will taper off. And, we are already talking about $1 trillion plus in CapEx. So from this point on, $650 billion, you will see a deceleration in CapEx growth. So the question for NVIDIA is, if there is competition coming, do they want to move up the stack, which they have already done with the release of a foundational model on the autonomous driving side, the Elpmayo model that they have released. And that's where, they'll have to pick their spots in terms of what are the areas where they feel like they've got a lot in terms of the adjacent capabilities. They've already have a very sizable networking business that Kunjan can talk about. But to me, the key is what kind of advantage these foundational models that are trained on the latest Blackwell architecture can show versus the ASICs, and how big that gap is. Because at the end of the day, companies that are using the NVIDIA clusters want to see, whether it's performance in terms of tokens per watt or, the intelligence layer being better versus some of the other foundational models that are not trained on NVIDIA chips. And that sort of distinction is very important to keep, the gross margins that NVIDIA has versus the competition.
I pick up on that, Kunjan. How do you see NVIDIA sort of growing into some of that story?
Yeah, I mean, look, Mandeep mentioned about networking. Just to give a point of reference, this is not an area Nvidia was playing up until even just 2 years back. Today, the revenues from networking are going to run close to 30 billion figure for the full year. Nvidia was not even doing 30 billion as a whole company back in until 2023. So that's just to set an example of that they have been venturing into new areas, moving up the stack, whether it is hardware, whether going beyond GPUs into networking and CPUs, or whether going into software ecosystem, whether it's through NIMs, through models, through their Omniverse software stack. So they have shown a lot of success in terms of expanding these businesses from nothing to billions of dollars today.
Mandeep, Kunjan mentioned earlier that Jensen Huang talked about the Rubin chip getting introduced in the second half of this year. Do you expect to hear more clarity from Jensen Huang when it comes to that next generation chip in the earnings next week?
Yeah, earnings, as well as they have their GTC event coming up in March. So clearly, there was a reason why Jensen pulled forward that announcement of the new chip to CES, just to set expectations that they're really aggressive about pushing out the new architecture and introduce that in the second half. And I do expect, the performance gains to be a big part of how they continue to show that they are ahead of competition, including AMD and the ASICs providers. So as I said, in the end, it comes down to, how NVIDIA's chips are helping address the power lead times for everything that we are dealing with right now. Power has the longest lead time. And if NVIDIA can address that power constraint and maximize, the throughput per unit of power, then they will continue to command premium pricing, which has been their pitch all along.
And Kunjan, what's the most important question that Jensen Huang needs to answer in the earnings call next week?
I think it'll be two questions. One is everyone's going to try and figure out the shape or the increase of that 500 billion pipeline that he had mentioned. So that's going to be most of the analyst goal.
Really appreciate this. Thanks to both of you for being with us. That's Kunjan Soubhani and Mandeep Singh of Bloomberg Intelligence. And up next, the world's richest man goes after OpenAI. We'll get an update on Elon Musk's lawsuit against the maker of ChatGPT. It's 37 minutes past the hour. I'm Nathan Hager, and this is Bloomberg. Thank you so much for joining us on this special edition of Bloomberg Daybreak. U.S. markets are closed for the President's Day holiday. I'm Nathan Hager. We turned out to a couple high-profile legal cases. The world's richest man, Elon Musk, is suing OpenAI, a company he co-founded. That trial's set to begin in April. For more, we're joined by Bloomberg Intelligence litigation analyst Matthew Schettenhelm. Matt, thanks for coming on with us. Remind us first off on the background of this case. Why is Elon Musk suing OpenAI?
Yeah, this goes back to OpenAI's founding about 10 years ago when Elon Musk was one of the principal contributors to the funding of its startup. And the allegation that Musk is making in this lawsuit is that when OpenAI was created, it was under the idea that it would remain a nonprofit and that it would be focused on contributing to the good of the world, not contributing to private profits. And so the basic claim that Musk is making now, some 10 years later, is that basically he was deceived in contributing what adds up to about $38 million in startup contributions, that OpenAI and Microsoft basically misrepresented how the company would operate. And so Musk, he threw the whole kitchen sink at the companies in his complaint, but it's been narrowed down now to 2 or 3 claims that basically say, one, that the companies were fraudulent in pursuing now a shift to a for-profit model, and the companies were unjustly enriched, and that the companies created a charitable trust, and now they've breached that charitable trust. And we're now on track for a trial on those issues.
Well, Elon Musk is asking for a lot more, though, than just his $38 million back, right? I mean, he's seeking tens of billions from these companies.
Yeah, that's the really interesting piece here is that in January, Musk made a filing in the case because it hasn't been clear exactly what would be the remedy. Say Musk wins here. Does the court just refocus the company back to a charitable purpose, or is there monetary risk as well to OpenAI and Microsoft? And Musk pushed hard on that last piece and made a filing that said, I'm not just seeking my $38 million back here. OpenAI was unjustly enriched and owes me, in the numbers he put in, $65 to $109 billion from OpenAI, from Microsoft, $13 billion to $25 billion that he's seeking as a remedy here. So that's, obviously a number that the companies have to take seriously. I think it's a different question whether the court would really consider that as a realistic remedy, or if that's more of a play here for leverage and potentially shaping some sort of settlement to threaten numbers on that scale. Musk calculates those through an expert based on the valuation of OpenAI, not on any actual returns for the company that have been unjustly received. And I think a court's going to have a real concern with calculating any sort of damages on valuation as Musk does. So I bring a lot of skepticism to that number. I think potentially the bigger risk for OpenAI and Microsoft might be the changes to its model going forward. If the court insists that it needs to be focused on a charitable purpose, that could be, substantial changes to to the contracts and the model that the companies are pursuing now. And Microsoft's made a substantial investment in OpenAI. OpenAI might be exploring an IPO. Potential disruption there, to me, is probably the bigger risk than these gigantic numbers that Musk is throwing around.
So how are you thinking this is going to potentially play out here? Is a settlement what you're thinking is going to be the most likely outcome? And what would a settlement potentially look like?
Yeah, so so we're headed towards a trial in April 27th, a jury trial, and jury trials are inherently risky. And you have potentially big numbers here. Settlements are always a real possibility. At the same time, I think OpenAI and Microsoft think they have pretty strong legal arguments that this case never should have even reached this point, that it should never even be going to a jury. The judge has repeatedly refused to stop the case. She rejected the motion for dismissal, the motion for summary judgment. I think the companies might want to try, to appeal this and to challenge those rulings. But the problem for them is they can't do it before this goes to the jury. So it's a tough call to see how this plays out. There's a chance the companies say, look, let's roll the dice with the jury and we can always appeal it afterwards, especially if the jury isn't asked to go to remedy. It's just to go to liability. So we'll see. It's really hard to say what a settlement looks like here, given the unprecedented nature of this suit. It's hard to see a concrete framework. I'm skeptical that those big dollar amounts come into play in any sort of settlement. But you have big personalities here, obviously, with Elon Musk and Sam Altman, who don't get along very well. And so to try to envision an exact way that they would structure a settlement, it's too early to say.
Thanks for this, Matt. Great having you on with us. That's Bloomberg Intelligence litigation analyst Matthew Schettenhelm. Another case in the national spotlight is set for next month. The Justice Department's antitrust lawsuit against Live Nation and Ticketmaster. For more on this, we're joined by Bloomberg Intelligence senior litigation analyst Jennifer Rhee. Jen, give us the background on this one. Is this just about how much we're paying for tickets to go to concerts and things?
Well, that's part of it. I mean, the allegations are that those fees that get tacked onto tickets for concerts that we all know so well are a result of Live Nation just essentially having too much dominance and control sort of across the entire ecosystem for large concerts. It's in promotions, it manages artists, it owns venues, and it owns Ticketmaster, which it acquired in 2010. And what's been alleged here by the Department of Justice, and a large group of states, by the way, 40 of them have joined this case, is that the company has kind of engaged in this long laundry list of exclusionary conduct intended to maintain its monopoly positions in a couple different markets. Under antitrust laws, it's not really good enough just to have a monopoly position. But if you're in a monopoly position, meaning like maybe 70% or more market share in a market, if you engage in conduct intended to exclude your competitors and to maintain that position in kind of an unfair way, that's where you get across the antitrust lines. And so that's what they're accusing Live Nation of here.
So based on your analysis, what's the thinking about whether that type of behavior has been displayed by Live Nation and Ticketmaster?
Well, based on what I've seen so far, the facts that are in the complaint and whatever they've allowed us to see publicly, because quite a lot is redacted, it looks like the Department of Justice has some really good evidence and I believe has a strong case here. This will go before a jury. And so it would be a jury that would decide on liability. A judge would decide on remedy, but a jury would look at what the evidence the Department of Justice puts in front of it. But, Nathan, there is some possibility that this case would not get there because there is a possibility that the company could settle with the Department of Justice before they get to that trial.
Okay, what has you thinking that?
Well, this is mostly coming from news reports. And from a pattern that we're beginning to see at the Department of Justice. It has a division called the Antitrust Division, and that is staffed with those people who are antitrust experts. They are antitrust lawyers, economists. They understand that area and the law, but they are overseen by the Attorney General's office, who aren't necessarily attorneys with antitrust experience, but can override the decisions of the division. And what we have what has been alleged, because I have no firsthand knowledge, but what has been reported is that some very well-connected Republican lobbyists, or I should say sort of in the MAGA side of the Republican Party, lobbyists have successfully been able to go over the heads of the antitrust division lawyers and procure settlements for their clients against the will of the antitrust experts at the DOJ. And there is a suggestion that Live Nation is trying that strategy here too, that they've hired quite a few people that are very influential with the Trump administration. For instance, Kellyanne Conway is one. They put Richard Grenell, who is a Trump confidant, on the board of, and who is running the Kennedy Center. They put him on their board. And apparently, according to news reports, they have lobbyists roaming the halls of the Department of Justice on a pretty consistent basis. So they're working hard, I think, to get to a settlement. And we have seen this tactic has success in the past, namely with respect to Hewlett Packard and its attempt to acquire Juniper that was first challenged by the DOJ antitrust lawyers, and also with respect to a deal between Compass and Anywhere Real Estate, where the DOJ antitrust division was discouraged from opening an in-depth investigation, and the deal was allowed to clear without much of a deep look into it.
Well, do you have a sense of what kind of settlement would satisfy the Justice Department?
So I think, Live Nation's been operating under a DOJ consent order for years, since 2010. That basically means an agreement, a legal agreement that they'll behave and run their business in a certain way. They had to enter that order in order to acquire Ticketmaster. That was the agreement. And there have been investigations since, and allegations and a finding by the DOJ that Live Nation did not comply with the terms of that consent order. And it had a lot of elements to it, but in particular, it wasn't supposed to strong-arm venues into using Ticketmaster as its ticketing agent, and it was in fact doing that. So that consent order was kind of bolstered and extended in 2019 during Trump's first administration. It just expired. So one of the things, obviously, the DOJ could do is just go back to that consent order, bolster its terms further, since apparently Live Nation hasn't really complied with those terms to begin with, and extend that, let's say, for another 10 years. These would be things like you cannot enter long-term exclusive agreements with venues you don't own. For Ticketmaster to be the exclusive agent, you have to allow other ticketing agents to come in there and vie for that position for certain concerts. That obviously stop strong-arming venues and artists. And one of the allegations here is that artists cannot play in the amphitheaters owned by Live Nation unless they agree to have Live Nation promote their tour. So there would be something like, you cannot engage in that kind of conduct. You have to let artists use your amphitheaters, but be free to pick their own promoter. I think terms like that could possibly be in a consent order that would allow for a settlement here.
All right. Well, we'll see how things go. I understand this is going to be hitting the courts rather quickly. That's Jen Bartashas, Senior Litigation Analyst for Bloomberg Intelligence. Thanks as well to Bloomberg Intelligence's Matthew Schettenhelm, Mandeep Singh, Kunjan Soubhani, Jen Bartashas, and Poonam Goyal. Thanks to you as well for being with us on this President's Day holiday. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.